Good afternoon and welcome to the INVINITY Energy Systems PLC investor presentation. Throughout this recorded presentation, investors will be in this listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Larry Zolch, CEO. Good afternoon to you, sir.
Good afternoon, and thank you. And welcome, everyone. Glad to talk to you today about Invinity Energy Systems. I'm joined today by Matt Harper, our Chief Commercial Officer and co-founder of Avalon Battery, a predecessor to Invinity, and Peter Dixon Clark, our Chief Financial Officer and with a great deal of experience in energy. We're going to start off with Peter talking about our results, so I'm going to turn it over to Peter right now.
Great, thank you, Larry. So I'll do a quick canter through the highlights and then we'll get into a little bit more detail if helpful. So across the top of the slide, we've got 9.3 megawatt hours sold between January and June and delivered a similar quantity and a closed sales backlog of 14 million. So that's essentially closed sales, not yet delivered, but very near-term revenue is the way to think of that number. In terms of 2021 itself, revenue 3.2 million, almost all of which related to our existing product, the VS3. So that is a real milestone for the company. There are a number of generations of earlier batteries, but this is the revenue that relates to the existing product, the VS3, and hence the huge increase in turnover year on year. So, truly historic. Year-end inventory, 9.9 million. This includes prepaid inventory. We don't call it inventory until it's sitting in our warehouse, but with some of our suppliers, we pay them up front. So effectively, this is how much of our cash is currently sitting within inventory. And you'll see straight away that 9.9 isn't far off the 14 million of closed sales backlog. So we've already made a really good start around delivering those closed sales. That's why we're confident that they are near term. Year-end cash of 26 million. That essentially reflects a very successful fundraising we had towards the end of last year. 29 million before expenses, and obviously rather less after expenses. Group remains debt-free. Technically, we do have leases, so that's more about accounting standards than debt. So what I'll do, if I may, is just dive into the primary statements quickly and just pull out some of the key points here. So I've talked about the revenue, 3.2 million, predominantly relating to our Oxford project. We've talked about that, and it's on our website. But that was very much the sort of the catalyst for the merged group, and delivering that, and the fact it's trading and delivering value to the customer is a huge validation of the product and what we offer in this space. Tough trading environment last year, as you all know, tough supply chain and big increases in expenses. We managed those as best we could, but we've got cost of sales of 6.6, so a gross loss of 3 million. Not unusual for a company at this stage of its growth cycle, but clearly something we're working hard to address. In terms of admin costs, we've split out the staff costs from other costs. Most of those staff costs relate to either our client-facing departments or our product-facing departments. So, it's very much about the value drivers. By client-facing, I mean Matt's commercial team, the guys who identify the sales and close the sales. Solutions engineering, who then take that sale and they're particularly interested in the interface between the battery and the client, the point of offtake. And then we have a customer operations team who are physically out on site delivering. Now, part of our business model is and part of our opportunities to drive down costs is to step back from some of the physical time on site, but to sort of appoint EPC contractors. And that's a sort of tried and tested model. And as one scales up, it works better and better. So, and then in terms of the development, we have two key departments. We have a technology department and we have a product development. Technology is more about the electrochemistry and the stack, which is what we think of as the engine in the battery. That's where all the intellectual property is, and we don't let that part out of our sight, as you can imagine. Product development is more about mechanical and electrical, but both absolutely critical to the product. We've got some operating expenses, some other operating income and expenses. The main item in there is what we call onerous contracts. If we close a contract that prior to delivery we think we're going to incur a loss on that contract, then we provide for it up front. And obviously as that provision unwinds, it works its way into the income statement. The reason it's here is this is reflecting the movement on the provision. So that gives us a bottom line result of about 20 million, which is an improvement on last year, so heading in the right direction. Again, given where we are in our growth story, the balance sheet is as important as the income statement. Net current asset, non-current assets, effectively goodwill left over from the merger. As many of you will know, INVINITY is the product of a merger between a North American company called Avalon and a UK company called Red-T. And the basis for that merger, the business rationale, is still very much in the fore. One of the two companies had a much stronger product, particularly the North American company, and the other had a much stronger sales pipeline. So you put the two together, it's a great combination. Inventory, I've talked about inventory being 9.9. Here I've split it between inventory and prepaid inventory. So that's where the 9.9 comes from. And much of this prepaid inventory has already been turned into physical product. It just isn't sitting in our factory. So for now, we've left it in prepaid. But it gives a flavor of how far ahead we are in terms of delivering and most importantly, seeing revenue from those deliveries. Other assets, cash I've talked about, 26 million. Trade payables, fairly straightforward. Contract liabilities, this is where customers have paid us up front a series of milestone payments, and obviously the greater the percentage of the contract up front, the better from a cash flow point of view. And we find that varies in different jurisdictions. Australia seems to be particularly generous, so another very good reason to do business there. And that will unwind as it turns into revenue. Provisions, I've talked about provisions. Much of that is owner's contract, and obviously the more we sell, the warranty provision will build up, and there's some sort of legacy in there as well. So those are the two key primary statements. But the CFO, the question I always get asked is about cash. So I thought if I set that out here, probably the easiest way to do it. So we've talked about the loss of about 20 million. There's the increase in inventory. So just in this year, we've invested almost £8 million of our, and obviously this is net of inventory that's left the factory, on contracts. Sorry, yeah, this is net of inventory that's left the factory. But we've built up the inventory, almost 8 million. Investing activities fairly modest, and there's the financing that I was talking about last year. So that's net of expenses, but does include some warrants that were exercised in the period. And rolling right forward to this year, what does all of this mean in terms of a current cash burn? So opening cash position 26, 18 million at the end of May. That's a movement of 8 million. Back out the inventory, so we're still investing in the inventory even as we talk. That gives 6 million over 5 months. That's a sort of a non-inventory cash burn of 1.2 million. So that's what the numbers say. Thank you very much. I'll hand back to Matt and Larry.
So we'll turn it over to Matt, our Chief Commercial Officer, and he can tell us about what's going on commercially.
Thanks, Larry. So look, INVINITY's thesis has always, around our path to net zero, has always been sort of distilled in 3 points. That shifting to renewable energy requires energy storage, that lithium is not going to meet all of our future storage needs, and that INVINITY has a utility-grade alternative. We have a battery that is safe, that is durable, that has the economics that deliver the long-run performance that utilities need to build the grid of the future. What's exciting about the last 6 months in particular is that we are proving that we have that product. We have proven product that we are delivering in the field, and we are proving that product is capable of being that alternative to lithium. The most recent example of where we've been proving that is at the Saboba Fire Station in California, where we're doing both renewables integration and critical infrastructure resilience, making sure that when California wildfires happen, this critical infrastructure remains powered and remains able to serve its community. Similarly, at the European Marine Energy Center up in the Orkneys, what we're proving is that we can be part of not only the sort of path to net zero, but we can also be part of hydrogen economy as well. Taking power that's being delivered from tidal generation and using that to generate clean hydrogen 24 hours a day. Back down here, closer to where we are sat today, the Energy Super Hub Oxford has been our marquee project that we've been working on installing and operating now over the last few months. This battery is doing two different things. It's doing both energy trading on the electric grid, and it's providing ancillary services to the grid, both of which together are operating today to generate some very compelling revenues for our customers at EDF and Pivot Power. Finally, at Scottish Water Perth, we're proving the portion of our business where we help commercial and industrial facility operators both decarbonize their operations and ultimately yield much lower electricity costs as they take self-generated electricity from their solar panels, wheel that energy through our batteries, and then deploy that energy into times when the electric grid pricing is at its absolute peak. What's exciting about this group of projects is that it comes together in what we view as the overall landscape for energy storage. Lithium batteries have done a very good job of proving that at the bottom left-hand side of this chart that they can be phenomenally profitable on the electric grid. But what we are proving in these 4 projects that are now operational is that the other areas on this graph, this chart, the other portions of that energy storage landscape are, perhaps even a much larger opportunity for energy storage in general, and is ideally suited for the kind of capabilities that we can deliver onto the electric grid, and that we are currently performing with these projects we now have in place. In terms of what that proof means for our commercial pipeline and our sales prospects, we've been very excited to see the amount of new inquiries and new qualified business that is sitting in our sales pipeline. Since we reported this same time last year, we're up 162% on our qualified deal flow. That's based in large part because of the kind of proof that we're delivering at these projects that are now operational. Some of you have heard us talk about this before will recall that that qualified group is not just someone who's rung us up and sounds like they have something interesting. We go through a very rigorous qualification process to make sure that those projects have the need, that they have funding available, that the project timing is within range, something that we can actually contract for in the next 12 months. And that ultimately there is a reason why our batteries are the best solution for a particular project. If those things are established, only then do we count those deals as part of our qualified group. The deals that we talk about as part of our advanced pipeline and part of our base pipeline are essentially those that are advancing towards contracting and close. Deals in our advanced group, which again is up 115% over this time last year, include projects where we've been selected as the battery provider, where site engineering is currently in process, and where we have a very clear line of sight towards when that deal is going to be completed. Finally, the deals that are in our base group, those are the deals that we are basing our business on, right? We are reserving working capital, we're reserving manufacturing capacity in our plants, that group are the ones that we believe we are going to be working on manufacturing, delivering, and operating in the near term. Exciting for us over the past few months is that we've significantly changed how we structure some of our sales activities. We now have dedicated heads of sales in all 3 of our core markets in the UK, North America, and Australia. And especially as we look to the amount of business and the amount of interest in longer duration non-lithium storage in the United States. We've been adding to our horsepower to be able to address the funds that are going to be available from, the Department of Energy, the California Energy Commission, and a number of other funding agencies.
So this takes us to the broader view. And we recently have run into the same kind of problems that every company has been dealing with COVID and shipping delays and supply chain issues and all of that. But we've also had areas specific to energy that have been, some of them, people have asked us, isn't that positive? There are energy shortages and energy prices going up. And certainly the operators of Energy Superhub Oxford have benefited from that and been able to help address it and benefited from doing so. But it's also been rather neutral or sometimes negative for us. But those negative things can turn into positive. Energy shortages are leading to a push toward renewable energy, but it can't happen in a day or a week. This is a multi-month and even multi-year process. And I draw your attention to lithium issues, that second from the bottom there. The environment where we're working to provide an alternative has its own challenges, and those challenges have been helpful to us in making an environment more suitable for our products. The price of lithium has been going up, not down. The delivery schedule has been lengthening, not shortening. The perception of and the reality of fire risk has been increasing, not decreasing. And that gets reflected in insurance costs and issues with siting and all of that. So we get a lot of organizations coming to us and saying, your battery sounds great. We want it. And that's a fantastic thing. But many of them are looking at a scale that we are not able yet to meet. And so we're working on how do we meet that scale? And one way that we're doing that is in developing our next generation of flow battery. And we're co-developing that with Siemens Gamesa, one of the leaders in global leaders in wind turbines. We signed in 2021, so last year, a joint development and commercialization agreement with them. And that is building a flow battery together that addresses the needs of wind turbines, large solar farms, and other even just pure grid connected needs at a scale that can't be addressed by our current product. Now, if you step back for a moment, look at lithium batteries are an established market now, but 10 years ago, they were at prototype stage. About 500 kilowatt hours was a pretty good sized lithium battery project. And that's certainly the case for many of our competitors and has been the case for us in the past. 500 kilowatt hour project, half a megawatt hour. The next stage would be to go to a pilot level, 5 megawatt hours or so. And that lithium batteries went through that stage as well. The following stage, 50 megawatt hours. So we're going up by a factor of 10. So we've been doing 5 megawatt hour projects. Now we're doing, and on that scale, now we're working toward 50 megawatt hour projects, commercial scale. And then with this next generation, we're able to address projects that are much larger than that, from 100 megawatt hours and on up. So this is a very important part of what we're doing is to develop this next generation product because we're fundamentally a product company. And it's going well, and we're not talking in detail about what we are doing, nor does any product company talk about products in detail while they're still in this development process. But you will keep hearing from us more and more about it. So I thought I'd take you through a bit of a vision of where we can head in the year 2026. And this is based on real information, but is not a real project. Let me emphasize, this is not a real project. But in this concept, some large organization says they're putting in a gigawatt, 1.2 gigawatts of DC solar. Now, to your right, there is an actual project in Southern California that is a 400 megawatt portion of a 750 megawatt solar farm. So this is just enormous amounts of energy, and they have to put in storage. They need to, because there's getting to be a lot of solar in California, and when the sun goes down, they need storage. And they are actually, an 8-minute is looking at storage, but the scale they're looking at it, we can't address now, but we will address it. So in this concept, it's a 100 megawatt project. That's the power. For 6 hours of energy, that's 600 megawatt hours. That's enormous. It costs $157 million, about $262 a kilowatt hour. And that concept, and again, this is not real, but it's based on real information, would in reality use thousands of tons of V2O5, of vanadium, as we use in our electrolyte. And that is available and will be available at that time. And in this concept, we would be building 2,000 of those modules that we co-developed with Siemens Gamesa in order to fulfill that. And that's another thing that's entirely within the realm and the scope of our manufacturing. I'll talk about that in a moment. And then those empty modules, the batteries ready to be filled with electrolyte, end up at a vanadium electrolyte plant. That one's US Vanadium, but there's one in Oxford, Oxchem, that looks a lot like it. And those are storage tanks for electrolyte. So then the modules are filled with electrolyte and they're sent to site. And at the site, the foundations are already there. One of the great things about flow batteries and our flow battery concept is they can be brought to site, tested and functional, and put onto concrete foundations, wired up, and be ready to go. And that's something that we are getting better and better at already in the projects that we've been delivering. In this case, then they get wired up with some Gamesa Electric PCSs. Those are power conditioning systems, or inverters that turn the battery DC to AC. And that's used right now, and we use Gamesa ones in Oxford, and they're part of the co-development project. And then in this case, the batteries are stacked up and placed right next to each other. You will never see lithium batteries placed in as close proximity as ours, because if one caught fire, it could propagate all the way through. So they're kept apart like ammunition bunkers. But in our case, by stacking them together, there's no fire risk. So then we get energy density that is quite good. It is not as good as lithium. Lithium batteries are famous for their energy density. It's also part of the problem with so-called thermal runaway. But it also means you'll never see our batteries in a car or a truck. They are designed for heavy-duty stationary use. So this gives you a vision of where we're headed, a possible project where in less than a year, we've gone from contract signing to over $150 million in this case of revenue. So in my last slide, before we get to questions, I want to tell you about what our focus is moving forward and what you can expect from us. Our focus moving forward is to co-develop this next generation product with Gamesa Electric, the fully owned subsidiary of Siemens Gamesa Renewable Energy. You'll also see other commercial partnerships. We announced one with Hyosung. Hyosung is an enormous company, similar in size to Siemens Gamesa, and they are in Korea, commanding in their ability to deliver electrical projects, and they have delivered almost a gigawatt hour, 1,000 megawatt hours of lithium-ion battery systems, stationary battery systems, and they've been looking for alternatives. It may be because catching fire is not a good thing, and they've had that problem. And so they're looking for alternatives. They bought our battery, they evaluated our battery, and they said, this is the one we want, and we now have them as our representative and are exploring further options on how we can work together. And we're also scaling up manufacturing, and that's moving from a rather bespoke manufacturer who's done a great job for us at the pilot level. I mentioned pilot level sort of at that 5 megawatt level, but they're not really capable of delivering at the 50 megawatt hour level, 10 times larger, and doing that across multiple projects. But Baoja, a large Chinese manufacturer of renewable energy projects, they are capable of that. And other companies have done that same transition from BCI to Baoja and gone to become very, very large in doing so. Our current product, the one before the one we're co-developing with Siemens Gamesa, is too expensive to work in some commercial situations and be profitable, or to be even break even for us. You saw that we'd lost some money on early projects, and that's true, and that often happens with pilot level projects where we had a great learning experience. We won't lose that same proportion in future projects, but they are still very hard to be profitable. As soon as the governments come in and say we can help, it makes an enormous difference. And they're saying that they can help, and they are. And this is across ARENA in Australia, BASE here in the UK, CEC in California, and the U.S. Department of Energy. Why are they doing that? Why do they care? They care because they're looking 2 or 3 years into the future, and they're seeing that the grid is going to be incredibly unstable. The proportion of renewable energy will be higher. The existing assets, coal, gas-fired, and nuclear will be less. And the energy storage needs can't be met by lithium. It was that original slide that Matt talked about. That is true. They see it. They're putting money where their mouth is. And then the last thing I'll mention for focus is expanded U.S. trading of our shares. The U.S. market has not been able to trade our shares very effectively. And by doing so, that is a larger market and increased liquidity, which we're looking forward to. We think that the valuation can be more appropriate. There's no one as distressed about our current share price as we are. What to expect? We're going to actually demonstrate that commercial scale to you. We've already started talking about it, where we've been selected to progress toward a 40 megawatt hour system with EDF, the Pivot, the companies that we did Energy Super Hub Oxford with. Obviously, they were happy with that, or they wouldn't have participated and partnered with us for this next low-des base-funded project. We also need to deliver. We have a pipeline of projects. We have to deliver, both demonstrating our commercial engagement and in delivering the products where we already have them in our backlog. We're going to be making substantial progress in that Siemens Gamesa product. And these things take time. It always takes time to do big, important new products, but we are working well with them. We will continue to, and we will be telling you more about it. And then last, important new relationships, ones that we're working on. You should expect hearing from us that we are not going to be doing this alone, that companies that have the stature of the existing relationships we have with Hyosung and Siemens Gamesa and others, those will be expanded and progress. So that concludes our formal presentation, and now we'll go to questions, and I see some have come in. So,
Larry, Matt, Peter, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated in the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides, can be found on our platform. As you can see, we received a number of questions throughout today's presentation, and thank you to all the investors for submitting those. Larry, could I just ask you to read out the questions and give responses where it's appropriate to do so, and then I'll pick up from you at the end.
Absolutely. And thank you for the questions. Some of them are hard questions, and that's highly appropriate, and we appreciate them. Paul asked, with the shares at 42 pence, what's the point in messing around with the short-term warrant expiry date? I'll turn that over to our CFO.
It's a great question. So we can amend the warrant in a number of ways. We can amend the conditions. It really comes down to how far the period is extended by, and how much good news we expect to be releasing between now and that period. So I personally think there is a point. I think it's also a great way to get more capital into the company, particularly if it matches good news. So personally, I think there is a good point to doing it.
And let me just follow up with Roger's question about 50% of warrant holders have to vote yes to amend it. Is that going to happen, Peter?
Look, well, the first part of the question is, do we have a track of our warrant holders? And yes, our warrant holders very closely correlate to our equity holders. So keep in mind that over our top 5 equity holders hold over 50% of our equity. So it's reasonable to carry that through to the warrants. And when we admitted the warrants to trading on Aquis earlier this year, that also required a vote. And that was a matter of, and that was heavily supported. But we were, as you would expect, very proactive with our bigger shareholders and warrant holders, who happen to be the same people, and they voted accordingly. So I think the makeup of the company and the register should, gives us a great deal of confidence around any future votes.
The placing last year, this is Roger asking this also, the placing last year was oversubscribed, but the going concern statement is rather grim, especially if you do not win Lodez 2. Not clear, given that cash is tight, why you did not take all the money offered.
Sure. Look, it's let's take that one point at a time. I mean, going concern statement contains material uncertainty, which is obviously not as good as having a completely clean going concern statement. It's not unusual for a company at our growth stage to have an emphasis of matter, particularly in the current environment. Auditors are very nervous at the moment. And when you have a company such as ours that is A, growing quickly, B, investing a great deal in inventory, and C, has a very international supply chain, we do register higher on the scale of risk. But, that is part and parcel of being a growth stock. The other point we should make is, the rate we grow is within our discretion. So if in the coming months, we continue to encounter headwinds, we can throttle back on some of our at the rate we ramp up. So there's a great deal within our control. But this company is about growing, is about investing in the business, is about investing in inventory. So really that statement tries to strike a balance, reflecting where the company is in its growth cycle, the macro environment, and in particular the supply chain issues. Totally take your point about Lodez. One of the reasons we're putting so much resource into it. Remember that we are down to the last 5, and from that 5, at least 3 will win. Will win to go through to the next stage. And we see ourselves as having a very good chance in that. And working as we are with EDF gives us a great deal of sort of internal discipline and equally a great deal of credibility in the eyes of Her Majesty's government. So we feel pretty good about that as well. So we see that as a balanced going concern statement rather than a grim one. Although the macro picture at the moment is it's tough out there, but we do expect it to improve. So that's where you're on that one.
Okay. Mike asks, well, recognizing that no new technology market develops strongly without competing suppliers, can you comment on your present relationship with Bushveld and their choice of CellCube as supplier for their own project? So it is true. There are competing suppliers. We're actually supportive of the larger vanadium flow battery market because we think it needs to be a market and a market segment, and then we are going to be the superior one in that market segment. So I just got back, as did Matt, from the International Flow Battery Forum in Brussels. CellCube was there, Bushveld was there. We talked with each of them. Others were there as well. And it's very clear that we're out in front. That's very clear because we're the ones who can start flashing up pictures of projects like Matt did, and not be just putting up. And we've been very careful in this presentation, you may have noticed, not to be showing renderings of any kind or computer generated images of possible future projects. Everything we've shown you in this presentation are things we've actually already delivered. No one else can do that. Our relationship with Bushveld is great. It's a fine relationship, but it's as a vanadium producer, and we've been using that vanadium in some of the electrolyte made by Oxchem, put into Energy Super Hub Oxford. And we're very pleased that we did not get that Vametco project. We did bid for it. We were a bit expensive because we were making sure it wasn't overly loss-making. And as I say, we're very pleased we didn't get it in this particular case. I think you can read between the lines, but it isn't something that is causing us a lot of heartburn. CellCube is a very valid competitor, and we're looking forward to seeing their first project actually energized and operating. Paul asked about regulatory news announcements in November and December. Both mentioned closing deals from near-term prospects and deals in negotiations. Since then, only one order has been announced. How did the board sign off the statements? I'm going to let Matt talk about that. The board signed off, by the way, because it was what we firmly believed was the right thing. But Matt?
Yeah, sure. I mean, from what was in our near-term pipeline in November and December, the 40% or maybe even more of that has been closed. That was what we announced, the Elemental deal that we announced earlier this year. And I would say that the rest of those opportunities remain very much in play. And as we've seen, what we've seen over the last 6 months is that customers are not moving as quickly as we would like to contract for some of these things. Some of that is the reverberations of last year in markets and in supply chain. Some of that is for customers who've been waiting to see us deliver proof of performance in some of the projects that we now have on the ground. But as I said earlier on, now that we have that proof of performance, we think we are going to see a significant acceleration in those deals coming to close.
We don't feel we have much credibility in telling you about the future. We're only going to be able to show it to you because we have told you things that we thought were going to become true and they were delayed. In every case, the delay wasn't caused by us. I think some of you will know that we thought we were going to be delivering the Yadlamalka Australian project, and then Aboriginal artifacts were found in the original site. A new site was identified. We're getting close to being able to let you know about that new site and getting confirmation of one that has been identified and is very, very close to final approval. So that's the kind of thing that is out of our hands, and yet we do everything we can to address it. So another question for Peter, what's your monthly cash burn in the current year, and how do you see it evolve over the rest of the year?
Yeah, so I covered that on my third slide, I think. It's 1.2 million sterling after adjusting for inventory. And in terms of how we see that for the current year, as I said before, it really depends how fast we ramp up. We are, investors are looking to us to ramp up and grow, et cetera, et cetera. So, if we do ramp up, then that'll start to tick up. But, we're in a good place with our inventory. And the second half of this year, purely on our closed business, we should be looking to be cash neutral, possibly even cash positive. As I say, the Australian contract, we've got a good chunk of the cash already up front, but clearly there's plenty to come. The Canadian contract, that's been signed more recently, so there's a smaller proportion of that cash received, and they're both good sized contracts. We deliver them before the end of the year. The cash follows. So I think that's the best way to think of cash. 1.2 million, unless there's a good reason to grow. And then operationally, expecting some big receipts during the second half of the year.
Next question, Paul's asking, how can the board expect any more equity funding given the continued destruction in shareholder value? And as I said, we are far from happy about where the stock price is. We're understanding that some of that is from larger issues that have to do with the environment and have nothing to do with us. And we also understand a larger amount of it has to do with the fact that we have been unable to tell you about some of the progress that we in reality are making. So we need to demonstrate that progress. We have the money that will allow us to progress long enough to demonstrate that progress, and the shares will reflect that. And then the shareholder value will be back. And that is our determination, and we're spending every working minute of every day on that very thing. And then if we can get to where the short-term warrants are in the money, that's terrific, and that's our plan. But if we can't, we have other plans as well. So there's a lot of opportunity in front of us because we are the leader, literally the leader in non-lithium energy storage. There's no other company that is as far along as we are at this point. Our shareholder value doesn't reflect that. There are companies, especially on the U.S. markets, that are far behind where we are with far greater market caps. And if you look at companies that have twice our revenue in 2021, like ITM, and with much greater market caps than we have. Do we think that's right? No. Will we have to do a lot of work and demonstrate a lot to get where we need to go? Yes. Are we in a position to do that? The company has never been in better shape than it is right now. Not in terms of prospects, products, in terms of commercial engagement, in terms of resources. And finally, and most importantly, in terms of the commitment and capability of the people in this company. So we need to demonstrate it. I'm not saying that anybody should think differently about us until we prove it, but we will prove it. Please comment on the discrepancy between your optimism as expressed as I just evidenced, because I'm now reading this as evidence in this webinar, and the market view of the company value. Well, I think I pretty much covered that. Look, I covered it. What can I say? It takes time to do things. It's already was taking time, whether there was COVID and delays and everything else or not. Those pushed it to the point where greater delays created greater problems and prevented us from talking about things that we're in progress on, and I'd like to have been able to talk about by now. We'll get there. Have you seen any meaningful changes in your share register in the last 6 months? I would say no.
No, certainly not at the top of the register anyway.
We really have had a great deal of support from our major, benchmark shareholders. They've been terrific. They understand that the time frame on which we need to deliver and can deliver is longer than some people's and some of our shareholders' time frames are comfortable with. We understand that. Theirs is they're taking a broader view because they see, like we do, this incredible potential for the company and the market. When we put in that slide with the arrows, some of them pointing up, and many of us even now, and then in the near term, many more. That is reality. That is the reality that we need to take advantage of. It's not automatic. It's not going to just happen. We have to push very hard to make that happen, and we will. How does the VS3 product directly compare to the equivalent VRFB? We just say VFB. We don't need the redox in there. The vanadium flow battery products of other competitors in terms of both performance and cost. Another good question, Matt. You've been around the industry forever. I'll let you address that, even though it's fun for me to as well.
Sure. They're broadly equivalent in terms of performance and cost. But performance and cost mean nothing if you don't have a product that makes customers money. And I think what the major differentiator that we have in the marketplace that is being proven as we deliver these projects is that because of the approach we've taken with that technology in terms of standardization, in terms of modularization, and in terms of mass production and manufacturing, mean that our products are the ones that, even if they have similar characteristics in terms of the performance they deliver, they are ones that we can actually get in our customer hands within a reasonable period of time, and have them that use the revenues that come from those factories be an impetus to future sales.
The company that's actually delivering real projects other than us right now is Sumitomo of Japan. They are real projects. They do it. They build them. They put them in. They're incredibly expensive because they build these custom factories to store energy, in effect, and using similar technology to ours. But who else has the ability to take and deliver on site a fully operational flow battery? We're not seeing it yet. We're not seeing it. It's easy to make a flow battery. It's hard to make a good one. And VS3 is a good flow battery. We're cost reducing it through Mistral, through the next generation product. But it's still a good product, and we'll be selling that product and delivering that product all the way through next year. Which goes to the next question. How confident, let's see. I thought I saw one. I guess I missed the question. Oh, okay. Yeah. Assuming all goes well with Siemens Gamesa with the development project, how long to first commercial sales after development complete? Well, the first commercial sales after the development complete, the first commercial sales will be before development is complete. But the real milestone that we're very focused on is called the commercial release date. This is actually occurs before the development is fully complete. But it comes at the point when we and Siemens Gamesa believe that the product is ready to be disclosed to the world. And this isn't just Invinity coming out, little Invinity saying, hey, we've got this new great flow battery. This is us jointly saying we have co-developed and will make available at this price with this specification on this schedule, this next generation flow battery. That's not going to happen this year. It will happen next year. My stake in the ground is happening in the first half of next year, that we'll have that commercial release. The product won't be shipping. It won't be shipping. It will be announced and we'll be selling it. We will have actually already, as in reality we already have, we will already be discussing commercial opportunities for that project. If we do it now, we do it under non-disclosure. And none of the numbers that Matt showed you in the pipeline have any of the next generation product in them. They're entirely the VS3 product, the current product. All of that pipeline is VS3. So when we talk about the next generation one, we're only talking about the concept at this point, but in the future reality. So when will we ship it is the logical question, and stake in the ground, end of next year. But that's a stake in the ground. Do hear that. All right. You referred to ITM. They and Series both have as large shareholder partner large shareholder partner companies. What comments do you have? How to make the feasibility of a large partner company being a major shareholder in the next 9 to 12 months? You know, I did talk about new relationships and enhancing existing relationships. I think any company that we work closely with, if we do a good job and meet their expectations, they start looking at wanting to have a closer and an equity relationship with us. And I think that's an important thing. We certainly are focused on having a good relationship, and then we'll follow through on that. And we're not just open to that. We're looking forward to that happening. So there's nothing to announce, of course. We're not telling you that will happen. What we are telling you is that it makes sense, and it's a good question. How confident are you that your IPR? IP. I see the IPR. I'm sorry, it's a US thing. It's IP, and I thought there's an initialism. I'm not familiar. The IPR will hold up if the market development continues to be slow and competitors get more time to catch up. That's making some assumptions that I don't fully accept. You know, there's the classic concept: don't accept the premise of the question if you don't believe it's true. Our market development isn't where the IPR is. The market development is the market development, and we are far in advance. We're working on commercial level projects at a point when everybody else is working on trying to get their pilot level projects. I was meeting with the CEO of a company that sells flow batteries, and they really have one current project going in, and that one current project is it turns out is actually one of their older ones being put in place, after a little bit of remodeling and reconditioning. They admitted we're way far ahead, and I'm not worried about it. So they're not going to get more time to catch up because we're going to stay ahead. All right. Hyosung were awarded significant projects from ESCOM in South Africa recently. Is this covered under the MOU, and are they projects that IES could be involved in? They're not projects that we can comment on. I'm sorry, nothing to say there. Absolutely nothing. Have Siemens Gamesa placed any restrictions on who the next generation battery can be sold to? That's a very good question. E.g., can it be sold to their competitors such as Vestas and Ørsted? Matt, you want to address that one since
Sure.
I've been talking a lot?
Absolutely. Look, the answer is no. There's no restriction on who we can sell to. This relationship is very much around building volume within the joint product. Right? We want to be able to get as many of these products into the market as possible because both Siemens Gamesa and we recognize that the number one way beyond the refreshed product design to get the cost and the reliability of these things to where they need to be is to sell a whole lot more of them. So, if there is an opportunity where one of their competitors were developing a project, they would be quite happy for us to deploy this product into that project. We may not keep our pencils quite as sharp as we would, in selling to a competitive entity. And certainly there are natural efficiencies in doing business with someone who's a direct partner compared to someone who may be competitive with one of those partners. But in terms of overall commercial restrictions, no, there's nothing that paints us into a corner.
Larry, Matt, Peter, thank you for that. I think you've actually managed to address all those questions you can from investors. And of course, the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Larry, could I just ask you for a few closing comments?
Certainly, thank you. INVINITY has never been in a position that is stronger than it is today. We're looking at a market that is highly receptive to alternatives to lithium batteries, but they have not been able to find one yet that makes commercial sense at what we call the commercial scale, at the tens of megawatt hour scales. And that's what we're focused on right now with our current product, currently shipping, working, delivered in customers' hands. And we're also working on the next generation product, one that is in the hundreds of megawatt hours scale and size, grid scale and utility scale, something that will help meet the energy requirements of the future. So we're very confident in our future. We have overcome many impediments to get to this place where we are, but we have the resources and the drive, the products and the environment to succeed in the future. So we're very grateful for your listening to us today, for asking good questions, and thank you for your attention.
Larry, Matt, Peter, thanks once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of INVINITY Energy Systems PLC, I'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you.